How are you there? I continue with my series on ASAP and the general economy of Zimbabwe. I've said in the previous video that ASAP stands for Economic Structural Adjustment Program. It was meant to to uh, to change the structure of our economy in Zimbabwe from 1990 to 1995 because the government, basically, it's because the government owed the IMF a lot of money, and the government was spending a lot of money on making life better for the Zimbabweans. So the IMF wanted its money back, the government couldn't pay back. Then the IMF said, in order for you to pay us back, you need to cut down on the expenditures. And those expenditures were cutting down on investment, on education, health, and on lower food prices in Zimbabwe. The effect was that food prices skyrocketed, the government cut down its jobs, so unemployment rate went up, inflation went up, and food prices went up, and the economy was bad. And the whole reason was so that the government would be able to achieve a surplus and be able to repay back its IMF debt. Ever since then until today, 2023, the government situation is much worse than before, meaning that ASAP did not work. And I said in the previous video that just like in the United States, when the government owes a lot of money to its investors, the answer, just like in the 2008 financial crisis, is not to close down the government or close down the country. That's what really the IMF did. It has closed down Zimbabwe. Essentially, from 1990 to 2023, what we have seen is a closing down on Zimbabwe, just like the failed banks of 2008. That's what is happening to Zimbabwe. We're no longer a country. We are a basket case because of that. What should have happened? We should have viewed Zimbabwe. I argue that we should have, or I argue that the IMF in the 1980s should have viewed Zimbabwe as a too big to fail, just like in 2008, the too big to fail banks. What the Reserve Bank of the United States did, that it printed more money and borrowed more than half it, some 1 point something trillion that Barack Obama signed in order to save the too big to fail banks, thereby saving the American economy. In the same breath, to save the Zimbabwean nation, the Zimbabwean economy, the IMF was supposed to write a much bigger check to the Zimbabwean government in order to save the Zimbabwean economy, in order to keep prices lower in Zimbabwe, even if they say that our industries were unsustainable. It was sustainable for the sake of keeping prices lower, for the sake of the Zimbabwe, so that they can eat. It was sustainable to keep unemployment lower in Zimbabwe so that people can be able to fight poverty. It was sustainable to fund education and health and infrastructure in the country so that the living conditions of our people can be better. Yes, of course, it came at a cost of higher government deficits, but which other government doesn't have high deficits? Even the United States itself is always increasing its deficits every year, because I argue that for any country's economy to grow, credit has to grow. The economy grows on credit and credit creation. So if the Zimbabwean economy grew in the 1980s because of the credit that came from the IMF and the World Bank. It meant that the economy in the 90s was even going to go through leaps and bounds through more credit from the IMF and the Reserve Bank and the World Bank, instead of taking back the money that was brought to the government. Because here's the thing, here's the effect: when you take money out of the system, you are contracting the economy. So in this case, when ASAP came to Zimbabwe, it was really meant to destroy the Zimbabwean economy, because there's no way you can increase economies by austerity. Even in Greece, it's the same thing happened. I do understand the argument of corruption in governments. Perhaps what you need to be focusing on is on addressing corruption and mopping up the excessive unnecessary expenditure, just like in the 2008 financial crisis, when the too big to fail banks were saved, that the central bank in the United States had some regulations on the banking industry, so that those toxic transactions, could be monitored. so that the banking system would be healthy. So what we need is a financial system that is healthy in Zimbabwe, an economic system that is healthy. So in order to do that, you don't do it by asking the government to pay back its money. No, you do that by giving it more money, but at the same time making sure that they are on a good course of justice, equity, and making anchored by focusing on fighting unemployment and fighting high inflation. That is how you fight poverty. So my point in this whole thing is that to fight poverty should be the sole reason why government exists, and should be the sole reason why the IMF should exist, to save the governments that are fighting poverty. So in order for government to fight poverty, they have to reduce unemployment and they have to keep the inflation rate stable. Why? Because a spiraling inflation rate erodes the purchasing power of ordinary citizens, therefore it's taking them back into poverty even though they are working. But if you address that issue and also address the issue of employment, even if employment may cause the government to run deficits, those deficits, that credit grows, the credit of the government grows. Okay, it translates to economic growth. So economic growth must be our focus. And why do we want economic growth? We want economic growth so that we can achieve positive outcomes in this broader society, a healthy society, an educated society, a well-fed society, a society that is out of poverty. And my point is that you do that by getting more debt, not less debt, not paying back the IMF, but asking the IMF or the market, okay, to borrow to give the government more money, to borrow more money to the government. Okay, I do not know the difference between borrowing and lending. Please forgive my English. So the market must borrow the government more money for the government to fight inflation, to fight poverty. And that is the point that I'm saying. Even today, we are not in ESAP, we're in 2023. The government owes 18 billion, so they say. I'm not even sure I'm not sure if it's true, but that's what they're telling us. So that 18 billion, we owe certain individuals or certain entities. There are a few of them, so they've got power. Like China has got power because they are a country. They're able to come into our books, into our country, and tell us what to do because we owe them money. Okay, I say that the my suggestion or the answer to all of that is to restructure who we owe the money to understand, not structuring the terms of the debt. I actually want us to pay back all those people that is 18 billion, all of them, so that we do not owe them. But we need to pay that 18 billion by coming up with a new market based treasury system, or rather a, a government bond treasury financial system, whereby private individuals, whether they are countries or they are companies or whatever, they go to the bond market and buy government bonds that have got a specific yield. So we could issue 18 billion of them, $18 billion worth of those, and whoever wants to buy them buys them. And if they are fully subscribed, we take that 18 billion and we pay all of our debtors. You understand? In one day, we will owe nobody. We will not owe the Chinese, we will not owe the Paris Club, but we will still owe 18 billion, but not to China, but not to IMF, but we'll be owing it to people, we'll be owing it to the exchange. Okay, the exchange is different from China. The exchange does not tell us what to do. The exchange is a place where buyers and sellers meet at the loan market, at the government bond market. So let's just say, for example, we owe China 5 billion, right? And and the at the bond market, we have got a certain percentage that we are paying. Maybe let's just say 10% as an annuity. Perhaps it will be attractive to the Chinese. Perhaps maybe the Chinese were currently paying them 7%. So if we say, okay, in the currency market, not currency market, sorry, in the bond market, we are paying 10% per annum. So they can convert their 7% to a 10% by how much did I say they owe us? I'm just giving an example. Let's just say they owe us we owe them 5 billion. What they will do, they will take $5 billion and buy these government bonds. We take that 5 billion, we give it back to China and say we don't owe you anything anymore. It's cancelled, done and done, done and dusted. But remember, they still have given us 5 billion, which now they are getting 10%. Now, if they want their 5 billion back, they don't have to come to the government. They just go to the bond market and sell that. If they want 1 billion, they just sell 1 billion. If they want all 5 billion, they sell all 5 billion of it in the market. So in that way, we don't have a government that is going around the world negotiating with other countries. No, just do it like the Americans. So that is how you do. And therefore, then the central bank, the job of the central bank, therefore, would be to make sure that uh, our currency is stable. All right. So we could do this in US dollars. I said I still haven't decided if this bond market must be US dollar based or Zim dollar based. Okay, I'm still looking at the merits and the demerits of the two. So if you know and you care enough to enlighten us, you can leave a comment below. The thing is that if it is denominated in Zimbabwean dollar, it means that our currency should be stable, all right? Which means our reserve bank needs to have invest in a lot of firepower to keep our currency stable, so that our investors have got very little currency risk. But if we do it in US dollars, the investors will not have a currency risk, okay, local currency risk, but the government itself will have a foreign exchange risk if there is a runaway on the currency valuation of the Zimbabwean dollar. So either way, the Zimbabwean dollar must not fall precipitously. So you see, either way of these two, whether I peg it in Zim dollars or US dollars, the Reserve Bank needs to make sure that our currency is not falling. At least it must maintain a certain band. How do you do that? Now, that's another thing that I have, another plan that I have. How do you do that then? How do you keep your currency strong? You go back to the late 1980s and look at the suggestion of the IMF when they're starting ESAP program. You see, on the face value, there is nothing wrong with ESAP's ideology of saying, okay, increase your sales to other countries so that you can get foreign currency and decrease your imports, so to reduce the pressure on foreign currency demand, and therefore it will stabilize your currency. That is true. That's the right idea, the same idea that I think we should adopt. However, the problem with IMF is how they suggested the government to derive at that place where we increase our exports and reduce our imports so that we can have positive trade balance and have a stronger Zimbabwean dollar, or rather a more stable Zimbabwean dollar, to curb the increase on the government's repayment program. To understand? So where I differ with the IMF is where they begin to say that the government must cut its expenditures. All right. My suggestion that the government should have been adding its expenditures. The government should have been looking for more money, investing more in industry, so that our industries can be more competitive. Now, what do I mean? You become more competitive by buying better machinery in your industries, making your industries more efficient or efficiency. That's the word I was looking for. Remember in the previous video, said there's a word I forgot, efficiency. The IMF said our industry, 70% of our industries in the 1980s were inefficient. So now, how to achieve efficiency? To them, efficiency was cutting government subsidies. But the problem with cutting government subsidies was that the real cost of production would be exposed, and therefore higher prices to the local market will cause local people to buy from outside the country instead of buying local. But that's not what we don't want people to buy from outside the country. You remember? We don't want people to buy from outside. We want local people to buy local, and also local industries to export to other countries. But the IMF has said the local industries must forget about selling to the local market. They must focus on selling to the outside market. That was wrong. They should not abandon selling to the local market. Instead, they must expand and sell outside the country. But then, because their production costs were high anyway, in order for them to be competitive locally, the government they had to subsidize our local industries. Isn't it? So IMF suggestion was, you government, cut the subsidies. All right. But to me, it's crazy. If you cut the subsidies, then the cost of local production, local industry becomes higher. If it is higher, it's even uncompetitive, even globally. So what we really need to do right now, you know what China does? China actually subsidizes most of its industries. That is why China has got low cost imperatives as compared to other countries, because they've got subsidies even up to today. I would suggest that the government should not have cut those subsidies. I do understand that cutting subsidies would have been cutting the government expenditure, because remember the IMF wanted the government to balance its books. As I'm saying that, I'm not interested in the government balancing its books now. No, 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 no. I'm interested in the economy becoming more competitive, not not trying to pay the IMF. My argument is that we were not supposed to be consumed with wanting to pay the IMF back. As I said in the previous video, that the IMF to me is like a central bank. A central bank, its mandate should not be to make profit. So the IMF was not supposed to put heavy burden on Zimbabwe to pay back its money so that IMF can make profit, because IMF is a central bank. Central bank can take losses for a longer time. Their mandate should not to make profit, but to improve the living conditions of the people of the countries that they serve, to improve the material conditions. So to improve the material conditions of the Zimbabweans, uh, uh, destroying its industry by removing uh, 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 by removing subsidies is actually the wrong thing. In fact, you should keep the subsidies in the industries, but rather go on a more technical, with a more technical eye, not a monetary eye, because monetarists change inflation rates and change strategies financially, but they do not change the way the factory works. I want to look at the factories and see, how do you reduce electricity costs? How do you reduce all input costs? How do you make our factories produce more for less? So if we were able to do that, to reduce that cost, we're able to sell overseas. Now here's the thing: in order to compete in foreign markets, our local industries need to be cheaper when other countries view us. One way of doing that is actually, one is our currency becoming a little bit weaker. So but then our currency was getting a little bit weaker anyway. But then that is not the whole story. Just because your currency is becoming weaker doesn't mean that people are going to buy from you. Also, marketing comes into play. But I've got no doubt that the produce that we had in the 1980s was of sufficient quality to warrant it a government policy that is geared towards Africa and the rest of the world, not just Africa and the region, but the rest of the world, becoming a manufacturer adopting a few products that will be made in Zimbabwe. For example, we know that uh, hard drives are made where, in that country next to Singapore. It's I forgot that country that is next to Singapore. It makes hard drives. We know what Vietnam does. We know what China does. What I'm saying is we should have adopted our our own things. But these things are done in Zimbabwe and focus on them. Whatever it is, it doesn't really matter. 4 or 5 or 7 products that we export to the whole world, and the government supports those companies, increases efficiencies in their competitiveness in those. But anyway, we have an advantage of Zisco steel. By that time, we had Zisco steel locally. So, which means that we quite leveraged on our ability to make steel and our ability to use the natural resources that we mine to produce, whether it's machinery or it's vehicles or it's whatever it is, it doesn't really matter what it was. But what I'm saying basically is that we should have looked at the technical aspects or what really is transpiring in industry, okay, to make it more to function as a as a base to increase our export. Well, we can still do that today as long as we fix ZESA. Now, how do we fix this? We need more money, not less money. So, for order to fix this, I will need to pay probably 3 billion or 4 billion US dollars to fix our electricity problems by, you know, building that, that for $4 billion project that we're having with Zambia in Kariba. Do that. Wanki Colliery have a big, what do you call it, coal power station there that can give us 2,000 or 3,000 megawatts. I think it's even enough for the country. But I envision that our economy will grow through leaps and bounds. So we need to expand our capacity to generate electricity. Hydro in Kariba, improve its capacity, use a lot of coal in Wanke, and that one in Bulawayo as well, the coal power plant in Bulawayo, expanded. Then how about pollution? We can't avoid pollution. Okay, you can't avoid. Otherwise, we can't industrialize. It's part of the deal. It's the same. Pollution is the same thing as this IMF. You don't get a greener world by reducing pollution. You get a greener world by increasing pollution so that the living conditions can be better, and therefore, if they are better, we can afford other ways of dealing with the carbon emissions. And you shouldn't. So yeah, I think that for this video we'll stop here. I don't want to make these videos too long. On the next video, we will also keep on talking about the ESAP, Economic Structural uh, Adjustment Program, and what we need to do now in Zimbabwe to rebuild our economy. My name is Ngobani Zondo, and I thank you for watching.